Welcome back. You're watching Market Fatafat right here on ET Now, a show where we get you all the stocks that are buzzing based on news flow as well as on technicals. And talking about technicals, now you have Ashish Kyal joining us on the show. Very good afternoon to you, Ashish. Thank you so much for joining us on ET Now. And the first stock that you've picked is Infosys. Of late, we don't have much of them. Actually, talk about large cap IT stocks. Infosys, do you think it's a standout candidate at least now?
Afternoon to you and all the viewers. Yes, Infosys is not much talked about given the fact that we can see clearly it has been rising but slowly and steadily, not very momentum based. But look at it, it has completely filled the gap which was created about a few weeks back in the month of July, and it has now inching towards that 1480 levels, which might, if that is broken, then we might see a strong breakout in the large cap IT space also. So the large cap IT looks for positive to me, and Infosys is managing to slowly and steadily rise. So the overall trend remains on the upside, and we can expect it to move towards the level of 1520. And on the downside, one can maintain a stop loss of 1400 levels.
Let's move on to stock number 18, and that is Jindal Stainless. This one isn't focused on the back of a brokerage note that we have from Investec, but they are maintaining a buy. They've increased the target price for Jindal Stainless to around 510 rupees per share from previous 410 rupees per share. What they believe is that Jindal Stainless actually has moved up 240% over the last 1 year, probably a reflection of the company's simplified corporate structure now, as well as the consistent spreads, and management is walking the talk on the product mix as well. Now, obviously, that is something that is better capital allocation in terms of avenues as well. That is working out well for the company. And if not for the mining capex, then the capex is either from brownfield operations as well as which is optionally there, or towards the downstream assets, a positive from the spreads or the ROCE front. So on the back of that, they do like Jindal Stainless. Investec is positive on Jindal Stainless. They're maintaining a buy, and they've given a target price of 510 rupees, which is an increased target price from 410 rupees previously. So keeping an eye on this one, trading with gains of almost 1% as of now.
All right, moving on, let's talk about Aster DM then. That particular counter is in focus in today's trading session. You have a note that's come out from HSBC where they've actually gone ahead and downgraded the stock. So HSBC has downgraded the stock to a hold rating from a buy rating. And they're saying it's owing to uncertainty. They've, however, raised the target price marginally to about 337 rupees per share from 330 rupees per share. This is on increased peer multiples. What HSBC is saying that yes, the revenue growth for the company is remaining strong, given the fact that it's on uptick of about 21% on a year-on-year basis in the quarter gone by, and the margins in the mature hospitals also have seen significant improvement on a year-on-year basis. But they're saying that the pending restructuring is a positive, but uncertainties that is around the deal dynamics is the reason why they are cautious on Aster DM. Therefore, they've downgraded the stock to a hold from a buy rating and marginally raised the target price. But if you look at the stock price, yes, at open it did see a dip, but from there on it's tried to recover in trading session. Now it's holding on to gains about 0.4% as we speak.
Let's move on, and Ashish, you picked out Cochin Shipyard for us, and look at the stock in the last 6 months, almost doubled in the last 6 months, and specifically in the last 1 month also, that return has continued, and it was almost 40% in the last 1 month as well. That specific return was an uptick that we've seen in the last 1 month. How much more upside is left for now, Cochin Shipyard? Should we actually start booking profits?
See, the overall trend for the stock is strongly positive, and if you check the volumes also, which happened over the past 2 weeks, it has been substantial. So the up move has been along with a good volume, and that's a healthy sign. So I would not look forward to book profits, but rather I would look forward, there is a possibility of another breakout coming into this stock, and it can move towards the level of 960 or 970 on the upside. That is the level where I can look forward to book profit. So currently it is still looking positive to me. Overall trend is starting on the fifth wave on the upside, taking it towards 960, and on the downside 850 can be a very important support.
All right, Vamakshi, let's move on. Let's talk about Sula Vineyards, and why is this one in focus today?
Well, Cheryl, this stock is in focus on the back of a block deal. Now, earlier this morning, we did highlight that reports were suggesting that the PE firm Verlin Invest Asia was likely to sell nearly 12.5% stake via block deals in Sula Vineyards, and this stake was valued at around 540 odd crores. And this has indeed transpired. We did see the stock dip as much as 5% in the trading session today after about 1 crore shares changed hands on NSE as per Bloomberg data. Now, some of the buyers are not yet known. We will be definitely waiting by for that data in the block deals data that comes in this evening. But on the back of this block deal that took place, we have Sulabhinath under pressure. The stock as of now is trading lower by nearly 3.5%.
Absolutely. Let's move on and talk about the auto stocks. And Ashesha, is this in focus because we'll be seeing the auto sales numbers coming out?
Well, absolutely. All of these auto stocks are in focus because auto sales data for the month of August will be released tomorrow, and all segments are gearing up ahead of the festive season. As far as the segment-wise performance is concerned, sustained recovery in domestic market is what we are expecting for the two-wheeler segment. But for the passenger vehicle segment, inventory is piling up across geographies, and that could be a bit of a concern. In fact, Nomura came out with a note where they say that for the passenger vehicle segment, industry volumes are likely to go up by about 9% on a year-on-year basis. As far as the two-wheeler segment is concerned, industry volumes could grow by about 9%. Medium, heavy and commercial vehicle industry volumes could jump up by about 20% on a year-on-year basis. Jefferies also came out with a note where they say that they expect healthy 9 to 12% growth for Ashok Leyland, M&M and Maruti, while they expect about 3 to 7% growth for Tata Motors, TVS Motors and Eicher. So ahead of the auto sales data that will be released tomorrow, all of these counters are in focus today.
Right. Milind Karmarkar also spoke to us earlier on, and he's saying that he's been holding on to Maruti Suzuki in his portfolio. But what are his views on the entire auto space? Let's listen in.
So we have Maruti in our portfolio, but besides that, we have never bought into autos because, frankly, again, a business which is cyclical, and most of the times I avoid cyclicals because I always say that I don't understand commodities very well. And these are trades in the sense not 5-6 months, but couple of years trade, you could say, where you could, if you could get it at the right time and sell at the right time, you make decent amount of money.
Okay, let's move on and talk about the next stock that is in focus, and this is on the technicals. And Ashish, Star Health is the stock that you've picked out for us. What are the charts indicating for this one? Last 6 months, not bad returns, 12%, but do you expect a further upside and a further run up here?
Yes, if you look at the overall pharma space, I think the pharma space is already buzzing, and Star Health is yet to catch up with the entire pharma index. After forming a very brief consolidation over the past few weeks, I think the stock is now breaking out of the flag pattern, giving the target on the upside towards the level of around 680 and much higher towards 700 as well. So the overall stock looks positive. It has managed to again break back above its 20 days average and can head towards the 700 levels. And on the downside, the support for the stock is at around 610.
All right. Earlier on, we spoke to Nilesh Kambli, who is Star Health's CFO, and he also spoke about the company's growth target going ahead. He also shared whether the customers will be affected by the medical inflation or no. Listen in to what he had to say.
We have been estimating that we'll go 20% and above in the short term as well as long term, 3 to 5 years. We are well on course to achieve the growth targets. And it's an all-round growth. There is medical inflation more so in the urban cities amongst the listed hospitals. We as a Star Health is a pan-India presence company. We have 35 to 40% in semi-urban rural areas. So while there is inflation in the hospital bills, there are ways and means to ensure that the customer is not impacted to the price increase. And we believe that there are a lot of claim efficiencies which will come in, which will ensure that we are able to efficiently manage this whole inflation.
Let's move on and talk about the next stock, and that is RVNL. This one is buzzing in trade. It rose as much as 2% intraday. And what we're seeing is now the company has actually emerged as the lowest bidder for an L1 project, that is for Maharashtra Metro Rail Corporation. The project is going to be including 6 elevated metro stations. This is one of the elevated at one is going to be an elevated one is at the grade 1 station at an eco park and the metro city in the reach of IA respectively as well. It is also included at a grade section formation, earthwork, boundary wall, retaining wall is what the project includes as well. So on the back of this order win, which is coming in or emerged as the lowest bidder for the Maharashtra Metro Rail Corporation, we're seeing that RVNL today is in focus, still holding on to those 2% gains.
All right, so that's RVNL that is in focus in today's training session. But let's talk about ICICI Lombard and why is this one in focus? Because you have Ambit that's come out with a note on ICICI Lombard where they are actually maintaining their sell stance on the counter. What they are saying is that the competitive intensity in the motor insurance remains elevated, which consensus may be prematurely discounting. Also, what they are saying, the new regulatory guidelines are actually resulting in insurers with EOMs greater than the regulatory limit. Also, what they are noting is the fact that they are seeing risks to the long-term growth estimates from increase in frequency of natural calamity events as well. So therefore, they are maintaining a sell stance on ICICI Lombard, also with the fact that they are set a target price of 1,030 rupees per share, which is significantly lower from where the stock is trading currently.
Okay, let's move on and talk about Voltas on the charts then. And Ashish, Voltas, when you look at it, has been an underperformer in the last 2 years, 1 year, 6 months as well. Just last 1 month is when we're seeing slight bit of a pickup coming in there. What are your charts now indicating? Should we expect that pickup that we've seen in the last 1 month to continue?
Yeah, it looks like that. Voltas has formed an inverted head and shoulder pattern, which essentially is a bottoming pattern, and given a breakout of the neckline today. And the stock is past 3 to 4 days, if you check, has been forming a bullish candle. Volumes are picking up with the rise. So overall, the trend looks to be positive on Voltas, and I think it is going to catch up on the upside. One can expect a target around 920 levels, which is the earlier pivot peak. So 920 can be the target. On the downside, the support for the stock is going to be around 835.
All right, so that is the take coming in on Voltas. Vamakshi, loads of stock on your radar because of the MSCI region?
Focus on the back of that, DJ. It is set to happen today, and in fact flows are expected to come in the last 30 minutes. Now when you look at the rejig that is expected to take place, now 8 additions and 1 deletion is expected in the standard index. In fact, the additions include IDFC First, PFC, Ashok Leyland, REC, Supreme Industries, Cummins, Astral, as well as HDFC AMC, wherein inflows are expected to come in as per a report by Novama, but a deletion on account of a deletion of ACC from the standard index, we're expecting to see an outflow, and that outflow is worth almost $94 million, which is when we compare it on volume terms, it is nearly 5.3 times versus the 20-day average volume. So on the back of that, we do have ACC under pressure today. But as far as the small cap index is concerned, we're expecting several additions here as well, which includes the likes of GE, TND, Nexus REIT, Kirloskar Pneumatic, Tamil Nadu Mercantile, ICRA, Ather, Tega Industries, as well as Hindu Air Home, while they've reduced the weightage on 361. So on the back of that, we are expecting to see some $2.2 million worth of inflows come in as far as GNTD is concerned, and that is the reason why the stock is surging in trade today. While for 361, we're expecting to see outflows worth nearly $2.8 million. So largely on the back of that, keep an eye out for these counters.
Okay, surely keeping an eye out on these counters on the back of that MSCI rejig. But let's move on and talk about Jubilant Food. And Ashish, what are the charts now indicating for Jubilant Foodwork? What is the target that you're keeping for this?
See, Jubilant Food has a very important support at 480. It managed to bounce back from there multiple times. Even this time, it has managed to move up from the 480 levels. The stock has been not doing much over the past few months, but I think it is about to start a good trend on the upside. And we can expect a target of around 570, which is near the previous resistance level. So 570 can be the target for Jubilant Food. And on the downside, one can maintain a stop loss at 490 levels.
All right, moving on then, Ashesha Cipla, why is this one in the spotlight?
Well, yes, this is on the back of a brokerage note that has come in from Bernstein, where they are maintaining their outperform stance on the stock with a target price of 1262. Now, this report is on the back of several media reports which suggest that the promoter group is looking to sell some of its stake in the company, and hence Bernstein says that Cipla is a fairly well-run organization. Remember, Blackstone and Torrent Pharma were some of the names that were surfacing who are the potential buyers to this particular stake sale that is being done by the promoter group, and Bernstein in its report says that Torrent has a fairly complementary portfolio with respect to leadership, and for Torrent they believe that the portfolio overlap is manageable. They also said that funding this acquisition for Torrent Pharma will require nearly 20 to 25% promoter stake dilution, plus a consortium of PE and some additional debt. They also say that both Cipla and Torrent Pharma are cash-generating businesses, and large debt should not raise any questions for both of these counters. So, on the back of this report that has come in from Bernstein, where they are maintaining their outperform stance with a target price of 1262, the stock is in focus today. It has recovered from the lowest point of the day, 0.5% higher in trade for Cipla.
All right, moving on then, and let's put the spotlight on Maruti Suzuki, and that particular counter is soaring in trade today. It was among the top gainers on the Nifty, 10,000 crossed. Also, it has hit a record high level in today's trading session. JP Morgan has come up with a note where they're maintaining a neutral stance. Their target is a tad below what currently the stock is trading at, but they're saying that they're placing Maruti on a positive catalyst watch. They're expecting the stock to potentially outperform peers in the coming 2 months. Also, what they are saying that the channel check suggests the wholesale volume prints should be strong and lead to market share improvement for Maruti Suzuki. They're also saying the strong SUV mix should lead to a margin surprise in Q2, and also beyond the festive season, they remain cautious on Maruti Suzuki as competitors' launches could restart again. So that's the take coming in from JP Morgan. However, they've kept it on a positive catalyst watch. So that's one of the reasons why you have Maruti soaring in trade. 10,000 crossed on this one.
Absolutely. Keeping an eye out on the back of that brokerage road. But I think I'm very excited about that 10,000 because we've been talking about it for the longest period of time. And Ashish, you have picked out Maruti for us. It's touched the 10,000 mark. Are you expecting a further run up now? What is your target here?
Absolutely. So I'm also excited about the stock. So it's good to see that the stock is crossing the 10,000 mark finally, and it is about to be at the record level high. The entire auto space is looking positive. If we check auto ancillary, they have been doing exceptionally well, and Maruti is inching up with a huge volume. So if you check today's volume, also is picking up very well. So the stock is definitely on the upside for the target of around 10,700 from here on. And if one wants to create a portfolio stock, this is one of the ideal stock that should be there. So from over near term, 10,700 is the target. And on the downside, I think any dip can be used as a buying opportunity as long as 9,700 is intact.
All right, so that's the take coming in on Maruti. But Vamakshi, let's come to you. Let's talk about Ajanta Pharma. Why is this one in the spotlight?
Well, Cheryl, this one is in the spotlight because the company has received its final approval from the US FDA, and this is to market topiramate extended release capsules. Now, as per the settlement with the innovator, Ajanta can launch topiramate on February 1st, 2026 or earlier under certain circumstances. And in fact, so far, Ajanta has received nearly 50 final ANDA approvals, out of which 41 are already commercialized. It also has 2 tentative approvals, and nearly 22 ANDAs are awaiting US FDA approval. So definitely that will be another factor that we will be keeping an eye out for. But there is a positive development wherein the US FDA has approved the marketing of topiramate capsules as of now. But unfortunately, the stock is not reacting to that. The stock is in fact trading flat.
Okay, let's move on and talk about MTAR Tech on the charts then. And Ashish, what is your view now on MTAR Tech after 40% returns in the last 6 months? Is it time to book some profits?
See, if you look at the mid-cap IT space, that has been buzzing for sure, and I will not go against the trend. Since the trend is on the upside, and trend is your friend, so you should be in the direction of the up move which is happening, and rather use any dips as a buying opportunity, I would say. And on the downside, this gap that it has created around 2,300 will be an important support for MTAR Tech, and on the upside, we can expect a target of 2,600.
Okay, let's move on and talk about Eon Exchange, MTAR Tech, Kirloskar Engines. Why are all these in focus today? Because what is happening, there's an FTSE change that is expected, and on the back of that, we would be seeing some inflows that would be coming in for these stocks. So on the back of that, we are keeping an eye out on this one. Now, let's talk about specifically what is the inflows that are expected here as well. And when you look at it for Kirloskar Oil Engines, the flows that are expected is of $11.42 million, while for for Ion Exchange, it's expected at around $11.25 million, and MTA Tech it's at $10.87 million. So on the back of that, we're keeping an eye out on all these three stocks today. They're buzzing in trade after we are going to be expecting an FTSE rejig here. So keep an eye out on these three stocks, all up and away in trade, more than 4 to 5% gain seen in trade this day.
Right. Moving on then, Vamakshi, let's talk about DCX Systems, and why is this one in the spotlight?
This stock is in the spotlight after the company did announce that they have entered into a JV with Elta Systems Israel. Now, both these companies will be incorporating a jointly owned private limited liability Israeli company, and this will be for the purpose of developing, producing, as well as distributing globally obstacle detection solutions that are based on radar and optics technology for the railway industry. Now, keep in mind that Elta is a subsidiary of Israel Aerospace Industries. Now, this is a company that is owned by the Israel government, so definitely it has a very strong backing out there. In fact, the company is also a global leader in defense, aerospace, as well as commercial markets. So on the back of that, we do have DCX Systems in focus. Definitely it has gotten into a JV with a very well-renowned company, and that is what is boosting the stock in trade today. As of now, the stock is up nearly 2%.
Let's move on to stock number 35, and Ashish, you picked out Gland Pharma for us. How is this pharma name looking like? 31% return in the last 6 months, specifically that recovery that we've seen coming in since June. So now what's the view on Gland Pharma?
See, Gland Pharma, since the low formed in the month of June, has showed a very good rise on the upside. The stock consolidated, formed a pennant kind of or a triangle kind of a pattern, and now is breaking out again in today's session. It's finding very good support near its 10 days average. So the overall view looks bullish. It might start the third leg on the upside, which can be very strong. Expecting a target of around 2100 on the upside, which is an aggressive target, but looks like eventually we should get that. And on the downside, the support for the stock can be maintained at around 1500 levels.
All right, and that is indeed the last talk on this edition of Market Fatafat. Thank you so much, Ashish, as well as Kunal, for joining us on the show, as well as Vamakshi and Ashesha for being part of Market Fatafat. With that, we are totally out of time. So goodbye for Vinny, myself, and the team that put the show together. Stay tuned. Closing trades coming up next.